Hi, I'm Lori Beausoleil, National Real Estate Partner for PwC, and just finished moderating an outstanding panel on emerging trends in real estate. Very lucky to have a panel of top CEOs and my partner as well from the U.S. bringing the U.S. lens. So what is top of mind for real estate for 2014? Well, in Canada, we're lucky. Commercial real estate is still expecting as an industry to be profitable. It's still an area of focus for foreign investors. People are still looking at Canada as a great place to invest their money as it relates to real estate. And so when you look at all of that, you say, well, what does this all mean? Well, there's some really neat trends now that are impacting commercial real estate. Trends that we've never really talked about the way we are now. And people have different perspectives, but from an emerging trends perspective, one of the key trends that we're really focusing on is what we see happening in our GTA. So when you look at the GTA and all the cranes, what is all this development? What is going on? What's driving all of this commercial real estate activity? And clearly the trends that we found from doing the emerging trends is we now got to start looking at demographics. We have to start looking at what we call the millennium, the baby boomers, the Gen Xers. Their demands are actually beginning to frame some of the activity that we're seeing in the real estate industry. What do I mean by that? We're seeing a large population moving back into the core. People say it's because they want to live, eat, play, and work in the area that they live in. But really, at the end of the day, it's also a trend, which everyone is referring to as urbanization, where people simply do not want to be commuting multiple hours a day to their place of work. So we're seeing a big trend into the city, but it's also changing the commercial real estate. If you look south of Front Street in Toronto, we've never had such activity. PwC actually is in a Great West Life building, which is south of the, if I can call it, financial core. Why is that? That's where that millennium generation wants to work. They want to work close to a train station, whether it be a GO train or a subway. They want to work in a brand new building that meets all the new environmental standards. And they're driving, for us, who's a professional service organization that uses a large proportion of that population, some of our own commercial real estate decisions. Now you see big towers going up, retail, you hear about mixed use. There's a whole new commercial real estate class called mixed use, which we never talked about before, where people are now looking at, residential and hotel, or a combination of retail and residential, or maybe they existed, but not to the significance that it is today. Then when we look, well, what else is happening? Well, interest rates are expected to go up. But nobody's excited about that. People have got really good governance and a really good understanding of debt and capital markets. So they're looking, or I should say debt and equity markets. So when they're looking at the impact of interest rates, they're saying, yeah, they're going to go up, but it's not changing the behaviors. People are still bullish on retail, industrial, and apartments as asset classes with significant returns and great cash flow opportunities. Then when we look outside of Toronto, just for a moment, and we look at what's happening out west is red hot. Why is that? Natural resources. We look at our top city, when you look at from an investment or development perspective, and more importantly from a home buildings perspective, Calgary is #1, followed by Edmonton and then Saskatoon. People say, how did Saskatoon get into the top 3? Well, there is a significant home building and development going on in Saskatoon as potash and other resources, other industries, but primarily around potash and agri, are really beginning to boom. Because one of the big trends is we've got a population outside of Canada that we export to. And so we need a lot of these items such as food and energy. And that's kind of where we're seeing some of our significant growth opportunities from a city perspective. One of the things that has caused a lot of conversation is this year Montreal has fallen out of our top 10 cities to the bottom. And people say, why is that? And it's interesting. And it's not because lots of good things aren't happening in Montreal, because they are. For any of those of us that have traveled to Montreal of recent, there's cranes in the city. They've got some great educational, they've got some great other opportunities. But when you're just looking at it on a relative sum game, when you're looking for yield, it's not as attractive as other cities where they can get a more significant ability to get that cash flow, or as we heard one of our panelists talk, accretive value. So then we also talked a bit about cap rates as a trend. And again, cap rates didn't have the same impact that it has in prior years in a conversation because everybody's really, the driver is cash flow. I mean, so a lot of our REITs who are on the panels today, two of the CEOs are from the REIT industry, are, simply said, yeah, cap rate compression as a trend, interesting, but again, our driver is cash flow. So in summary, what am I saying for Canada? Canada is still looking very good and very promising for 2014 from a commercial real estate perspective. It looks like the traditional drivers are impacting some of the types of real estate that's going to get built. And again, more importantly, I think the best part about what's happening in Canada is we do have commercial real estate that is driving some of our economic growth. And for those of us that are in this industry, that's a great thing to have happen. So all in all, I'm looking very forward to a bullish year for Canadian real estate in Canada.